Hey, it's Mike, Cross Country Mortgage. It's Monday morning, and it's time for your Monday morning update for the week of April the 21st. Hope you all had a great weekend. Just a beautiful, beautiful day in the North State. Got out and rode my mountain bike and really enjoyed the trails. So let's talk about what happened last week in the market and what's going to happen this week. Always try to give you insight about the mortgage side of real estate so that you can make those educated decisions when you're buying and selling and working with clients that are buying and selling. So last week, we actually saw a 58 basis point improvement in the market. Hey, that is a big improvement. It's small in consideration of what we've been through, but let's show you the chart so you can see on the right-hand side here, this big red series of red bars, these candlesticks represent one day of trading. This is where mortgage rates are determined, trading of bonds in mortgage-backed securities in the bond market. And when we see this big downward move, which was last week and prior to last week, over 150 basis point sell-off, significant move, rates went up. And all of it was centered around all the tariff chaos. But then last week, you can see Monday, Tuesday, and Wednesday, we got some of it back. And then Friday, we got lost what we gained on Thursday, and then today it's down a little bit. Now these red bars on Friday and Monday, pretty insignificant to rates. The big nice thing is we got a 58 basis point improvement, which means money flowed into the bond market. Why? Well, a lot of this just had to do with the fact that there wasn't any tariff news that was crazy. There wasn't any chaos. Everybody kind of settled down. It was a short week last week. And so a lot of people kind of parked their money in the bond market before Good Friday as what we call a flight to safety, just in case there was turmoil or chaos over the weekend. They didn't lose money. It's a safer place. So what are we looking at this week? You know, there's not a lot of data that's going to move the market, economic data domestically within the US that's going to really move rates that much. Everything's really going to be centered around geopolitical, and I'll talk about that in a sec, and then the Fed. So geopolitical, you know, a lot of the other main uh, economies are actually lowering their equivalent of a Fed fund rate. Ours is not. And there's a push and pull with Trump and with our current Federal Reserve Chairman, Jerome Powell. These guys don't like each other. Trump wants him out, but the Federal Reserve is independent. He can't just kick him out. Some people are making the argument that maybe he can. But one of the things that gives the power to our Federal Reserve is that we are independent. There's not a king that's going to just remove somebody because they don't like him. And Jerome Powell heads the Federal Reserve, and he's making and all the members are making economic decisions for the better or the good or the bad of our economy, depending on who you're talking to. Some don't agree with them. So there's a lot of push and pull there. And is Trump really serious about getting rid of them? Can he do it? It's creating turmoil. It creates a little bit of uncertainty, a lot of uncertainty and doubt in global markets that invest in our Federal Reserve. So we'll see if there's any news that really starts to mature and come out with that since the threats were made last week. And also tariff news. Are we going to see more tariff news? This is creating so much uncertainty and chaos that, as we've seen, people aren't just shifting money from one market to the next. They're pulling the money out of both markets, back in both markets. And we are now really in an environment of just a lot of volatility in the market. Sometimes we go through these periods where there's stability. Nobody expects there to be stability, a lot of volatility. And if we see any movement, it's probably going to be centered around those tariffs. They're off and on. Are they negotiating with China? How are these negotiations happening with other countries? Can we start seeing some of those that news this week about those negotiations? And then the second thing is the Federal Reserve. The next Fed meeting's in 2 weeks. And so 1 week before the Fed meeting, there's something called a blackout period where the Fed members can't give their opinion or their insight about the economy. So this is the last week they're going to do that. And everybody's talking. Everybody's got speeches and meeting with media. All the members do, which make financial decisions on our economy. And then something's coming out this week called the Beige Book. And so the country's broken into different districts. Federal districts, and they come together with this Beige Book, and those members basically say, hey, what is our economy going to do? How many rate cuts do we expect? How are these different districts doing? And that is right before the next Fed meeting, and that could impact whether the Fed's going to raise rates, lower rates, the Fed fund rate, or leave them the same. The Federal Reserve Chairman last week did say that they really can't make any decisions without more clarity, without knowing what's going to happen. And all the tariff news is really the most impactful on our economy right now. And we probably won't see the impacts of these tariffs till maybe the end of May or June. So we're just in this period where nobody really knows what's going on or how the impact's going to affect our economy. There's one argument that says, look, if these tariffs are going to push us into a recession, if they're going to raise prices, obviously that's inflationary, and the Federal Reserve should actually raise rates to fight inflation. But in order for the tariff argument to work for our economy, the Federal Reserve actually has to cut rates. And so there's just a real push and pull. It's kind of uncharted territory in some ways based on the extreme nature of the tariff news. So we'll be listening to these Fed chairmen this week to see what they have to say. So that's it for the week. We expect a volatile week. We're floating today. Obviously, if we see some changes to the market, we'll move to a locking position. If you have any questions about what's happening in the market, need clarity, don't hesitate to give me a call. If you know somebody can benefit from this video, please forward it to them. Have a great, productive week, and look for my rate drop text on Friday. If you aren't on the list, if you're not getting that rate drop text, please just email me, call the office, let us know. We'll stick you on that stream. And again, have a productive week. We'll talk to you soon. Bye-bye.